Good morning. You're watching Market Cafe on ET Now. I'm Shreyansi Singh with my co-host Snehi Shah, and over the next 1 hour, we'll take you through news and updates from within the country and across the globe. Good morning, Snehi. How's the handover coming in from the US markets?
Good morning, Shreyansi, and a very good morning to all our viewers as well. Well, the handover from the US markets is not looking so strong this morning. Let's take stock of what the US markets have done then, and the biggest data point to watch out for yesterday, the biggest news that came in yesterday was the FOMC meet minutes that were released last evening, and the Federal Reserve signaled in its latest meeting notes that monetary policy will remain restrictive and give no indication of cutting interest rates anytime soon. So this is the gist of it broadly. We will talk about this in more detail over the course of the show. So on the back of this, then during the regular trading session on Tuesday, the S&P 500 and Nasdaq have ended their 5-day winning streak. S&P 500 lost 0.2%, while Nasdaq has also dropped almost 0.6%, more than 0.5% drop coming in for Nasdaq as well. On the other hand, you also had the Dow that fell almost 0.2% as well. Now, when we talk about Nasdaq was under pressure because Wall Street assessed Nvidia's latest earnings results. Now, the chip giant has posted a third quarter adjusted earnings and revenue that has beat expectations, but warned that export restriction on China would weigh on its fiscal fourth quarter. We'll also touch down on Nvidia's results over the course of the show. On the economic front, then, investors will watch for durable good orders, weekly jobless claims, and consumer sentiment data set to release on Wednesday. Let's also mark what US bonds have done, and the 10-year Treasury bond yields has held steady as traders have assessed what the Fed had to say in the minutes that they released. US 10-year bond at 4.40, so well under that 5% mark that it had reached earlier. And shifting focus to Europe also, then Europe markets you can see largely in the red. The Pan-European Stock 600 index very flat, did not do much, but ended in the red as well. FTSE down 0.2%. DAX also nominally in the red, very flat, but in the red nonetheless. CAC 40 also down 0.2%. So, well, this is the handover that was coming in globally. But while we had the global handover looking a slight bit somber, Shreyansi, tell us what crude has done.
Absolutely. So oil was largely unchanged, and this was as investors turned a little bit cautious ahead of a meeting of OPEC Plus this Sunday, when the producer group may discuss deepening supply cuts due to slowing global growth. Now, both contracts had climbed about 2% on Monday, and this was after 3 OPEC Plus sources told Reuters that the group made up of the Organization of Petroleum Exporting Countries and its allies was set to consider whether to make additional oil supply cuts when it meets on Sunday. Now, the Brent crude contract for January settled higher around that $82 per barrel mark. And when you look at the West Texas Intermediate contract or WTI contract for January, that was largely steady and settled near the $77 per barrel mark. Now, OPEC Plus is likely to extend or even deepen oil supply cuts into next year, and this is something that many analysts are predicting. At this point, oil has fallen about 16% since late September, and this was also as crude output in the US, the world's top producer, held at record highs, while the market was also concerned about demand growth and economic slowdown at the same time. But when you look at gold, that does have a little bit of a strong handover coming in because gold marched ahead to the beat of a weaker dollar and above that key $2,000 mark, driven by expectations that the Federal Reserve had reached an interest rate peak. Now, lower interest rates do decrease the opportunity cost of holding gold, so that was largely expected. Silver, meanwhile, was also mirroring the yellow metals moves, but is in focus on account of a supply deficit this year largely.
Absolutely, and with that, let's also take a look at all the important events that you need to be tracking in today's trading session. When it comes to corporate action, then you've got Honasa Consumer. Remember, this is a recently listed company on D Street. They will be declaring their financial results today, so keep an eye out on that counter. And when we should focus to action in the primary markets, well, you've got 4 IPOs that will be opening for subscription today. Tata Technologies, all the buzz has been around this IPO. You've also got Gandhar Oil Refinery, Fedbank Financial Services, as well as Flair Writing Industries. All of these IPOs will open for subscription today, so keep an eye out on all of this action today.
And on to some somber news. A sliver of hope still is for the Palestinians as Israeli PM Benjamin Netanyahu urges government to approve the Qatar-mediated deal for a temporary truce in Gaza. However, war will continue after the expected pause in fighting. Bombardments continue across Gaza in and around hospitals. The WHO has renewed its call for a ceasefire after numerous doctors were killed at a hospital in northern Gaza.
Absolutely, and we're just getting the latest update coming in from Israel as well, that the Israeli government has voted to accept a deal that would release some hostages being held by Hamas in Gaza. So, well, this is some news, some positive news that's coming in from Israel, but let's shift focus and talk about the Fed now, because no signs of policy easing from the latest Fed Reserve meeting can be seen. Officials hardly tilting towards cutting interest rates anytime soon as inflation continues to be above that 2% target. The FOMC members are still worried that inflation could be stubborn and could edge higher. In the light of potential rise in inflation, the Fed may need to tighten further, is the word coming in.
Meanwhile, Nvidia continues to woo the street, and this time with a beat in their Q3 results. The chip maker, however, sounds caution on Q4, citing export restrictions. The company expects the said export curbs to impact sales in China and other countries.
Absolutely, and let's also take stock of what Amazon is doing, because shares of retail giant Amazon closed with cuts of over 1% after reports said that Jeff Bezos is expected to offload more shares of the company. Bezos may sell as much as 8 to 10 million shares, which roughly amounts to $1 billion worth of stock. Now remember, Bezos had offloaded about $240 million worth of shares just last week.
Let's switch focus to crypto now. Crypto assets took a beating after Binance founder and chief pleaded guilty to charges over money laundering from the US Department of Justice. The Binance coin sunk 5%, weighing on the rest of the market. Bitcoin slipped almost 1.5%, while when you look at Ether, that was also lower by 2%.
Shifting focus to OpenAI now, because the uproar continues at OpenAI's offices as employees revolt against the board due to Altman's unceremonious ouster. Now, investors demand reinstating the ousted CEO and president, replacing the current board as a whole. Now, in a letter to the board, close to 500 staff members have threatened to leave OpenAI and flock to Microsoft. Some media reports also suggest that the investors are mulling a lawsuit against OpenAI's board. Talking to X, Sam Altman reassured how his top priority remains that OpenAI continues to thrive. At the same time, Microsoft Chairman and CEO Satya Nadella says, and I quote, "Irrespective of where Sam is, he's working with Microsoft," unquote. My colleague Sumita is here with more details on this. Sumita, take it away.
Upheaval at OpenAI refuses to die down after Sam Altman's shocking ouster as CEO and onboarding at Microsoft. Now, a vast majority of employees at OpenAI have signed a letter to the company's board asking members to resign and reinstate the former CEO Altman and President Greg Brockman. If Altman is not reinstated, they say that they will join the duo at Microsoft, in fact, leaving the future of the high-profile company increasingly uncertain. They also question the board's incompetence. Meanwhile, on the investors' side, several of the company's investors are also trying for the return of Sam Altman and his partner Brockman. Replacing the current board as a whole is also not an alien idea, because they want to protect their investments. Meanwhile, Microsoft is also, is not completely averse to the idea of Altman returning to OpenAI, because remember, Nadella said in an interview to Bloomberg, and I quote, "Irrespective of where Sam is, he's working with Microsoft, and more importantly, Microsoft is interested in the kind of technology that's developed, OpenAI's cutting-edge technology, whether that comes from Sam Altman's team or OpenAI's team, they are really not averse to this idea. In fact, Microsoft is in a win-win situation at this point in time, because it's also seen its share price reach record highs. Sam Altman, meanwhile, in a slew of tweets, has expressed his support and fondness for OpenAI. He says, and I quote, "Satya and my top priority remains to ensure that OpenAI continues to thrive," unquote. So it clearly looks like OpenAI is coming under a lot of pressure, not just from investors, not just from the tech fraternity, but its own employees.
Well, thanks, Sumita. But with this, we're timed out on this segment. See you on the other side.
Hi Hi there, welcome back. You're watching Market Cafe on ET Now. Now let's talk about the state elections that are underway, and every party is coming out with their manifestos and making promises of what they'll offer, also known as freebies. Now, while talking at the PM Swanidhi outreach program, the Finance Minister Nirmala Sitharaman said that before announcing freebies, the financial position of the state must be taken into consideration by political parties. Here's an excerpt of what she said at that event. Listen in.
फ्रीबीज आप घोषणा करने से पहले ये चिंता करना चाहिए कि जो भी राज्य आप रहते हैं मुझसे बात करने के समय आपके फाइनेंशियल पोजीशन स्टेट में क्या है, उसके अंतर्गत क्या आप ये फ्रीबीज जो घोषणा करते हो वो आप कर सकते हैं, मतलब फुलफिल कर पाएंगे? क्योंकि अगर घोषणा करने से पहले आपका बजट का समझ है तो इसके लिए इतना खर्च होगा, ये कैलकुलेशन करने के बाद जब सत्ता में आएंगे वो बजट में डालो, असेंबली में लेके चलो, असेंबली में पारित करो और उसके तहत बंटवारा करो पैसा, जिनसे आप वो चीज खरीद करके जनता को फ्रीबी के नाते दे रहे हो. So if it is provided for in the budget, if it gets passed in your state assembly, क्योंकि public scrutiny होगा, फिर उसके मुताबिक आप पैसा allocate करो तो मैं समझ सकती हूँ. मगर बहुत सारे राज्यों में स्टेट का फाइनेंशियल पोजीशन ना समझकर आप सीधा प्रॉमिस कर रहे हो, आने के बाद उसको वितरण भी कर रहे हो, मगर पेमेंट के समय हाथ ऊपर उठा रहे हो. ये क्या तरीका है? इसीलिए मैं इसमें आपत्ति बोल रही हूँ.
Well, let's also go across to Sumit Chaturvedi, who's standing by with more details. Sumit, good morning. Help us put this into perspective.
But freebie culture is once again in focus. FM Sitharaman today said in a rally that the states are announcing freebies without taking into account the financial health of the states. So they announce without taking into account any consideration, and they backtrack also. So this is put in focus on freebies once again. We have seen the reports saying that over 1,700 crore worth of cash has been seized over the last few weeks. The elections are happening in 5 states. Also, a point to be noted here is that India's financial health depends a lot on these kind of freebies. Already many agencies have said that it's a race to the bottom, so it's clearly going to impact India's financial health. So once again, India's financial health, because of freebie culture, is into focus. It's called revenue culture by some parties, while others say that revenues are being given to corporates. So this is again putting a picture on India's financial health and system, which has always been debated in political circles, in global political circles. In fact, because of the culture, sometimes political parties give TVs, cycles, laptops, free power, free ration, free health insurance. So these kind of, all these things have come into light once again with FM's comments in Telangana.
All right, Sumit, thanks for all of those details. Let's shift focus to Byju's, because more pain is coming in for this EdTech major after the Enforcement Directorate announced and issued a showcase notice alleging FEMA or FEMA violations amounting to a whopping 9,000 crore rupees. Now, the notice extends to founder Byju Ravindran and Think and Learn Private Limited. Let's go across to my colleague Sameer, who is joining us on the phone line with more details. Sameer, what are you making of this and what are you picking up?
So if we take you in the backdrop of the entire case, this year, April, in the month of April, the Enforcement Directorate had conducted search and seizure operations in the 3 premises that are connected to Byju's, the Think and Learn, this company that was held by Mr. Ravindran. So at these 3 premises, ED has seized several documents pertaining to the investment that was received by the company, and that was the overseas investment that was done by the company. And post that, after going through all the documents that was seized by ED, and also after recording the statement of Mr. Ravindran and the Chief Financial Officer, Later on, it was found that the statements were contradictory. The investigation that ED carried out, they found so that there are several violations under the FEMA Act, the Foreign Exchange Act. And as per the action that has been taken by ED, what we are getting to know that the show cause notice of amount rupees 9,362 rupees has been issued, and it is very likely that in coming days the things are going to be more troublesome for Byju's, in the sense that severe or the hefty financial penalty will be levied, and we might see some more strict action that might be taken up by ED in coming days.
Well, right, Sameer, but point taken. But about the Manipal investment then, how will the FEMA violation come into play and what are you making of this?
Yes, definitely. Because if you see the entire development that has been unfolding since April this year, so since a long time, Byju's have been denying that there is any sort of violation. But in the month of April this year itself, the search operation were carried out at 3 different locations that were connected to Byju's. After that, the detailed statement that was recorded, not just of Mr. Ravindran, but also of the Chief Financial Officer. And post that, ED has conducted this exercise, that the show cause notice of rupees 9,362 crore that was issued. So this shows that everything is not all right with Byju's, and the violations or the allegations that has been raised some more questions related to the functioning of Byju's, because proper disclosure has not been done related to the overseas investment that has been done by the companies, and also the investment that has been received by the companies. So there are multiple questions which are yet to be answered, and it clearly shows that in coming days, Byju's will have to face much more strict action from the investigating agencies.
Well, thanks,
Sameer, for all of those details. Let's move on and take a look at TCS, because in the apex court in US, TCS has come under pressure because the court has rejected its appeal against the order on the $140 million penalty in the Epic Systems lawsuit. The IT services major said it will be taking a $125 million hit on its Q3 results. The provision equivalent would be 7 to 8% of the company's quarterly net profit and 2% of their full year profits.
And it's an ET Now Newsbreak confirmed that recently government has issued guidelines for implementation of insurance for uninsured vehicles. The Transportation Department is actively working on a method to communicate messages regarding uninsured vehicles. My colleague Anurag Shah had an exclusive conversation with Ravinder Singhal, who's the Additional Director General of Police Traffic, Maharashtra. Listen in to that conversation.
Insurance part. So there also, whether the vehicle is insured or not, that is one. And so whether there's a third party insurance or not, that is another thing. And whether if a person who has to get the benefits of insurance, whether he has got or not. So regarding this, we are having discussion with the insurance companies. Okay. And we are also spreading the message. And we have also recently an order has been issued by the Government of India, and that message is also being spread to all.
Okay, sir. So you have received the order of that Government of India, because that is a very big development which says that Chief Secretaries has to ensure the third-party insurance for all the uninsured vehicles.
So regarding this, because one is the lack of knowledge. So that's a major problem in this area, for which we are working, and the insurance companies are also supposed to work, and they will of course work, and the various departments like police department, of course, then the road transport department, all the departments who are concerned, they would also be working.
So you will be sending notices, because now you will have access to data from NIC of uninsured vehicle, so you will be sending notices to the...
So we are finding the ways. First let us study this whole process, and then accordingly we will be sending messages and involving everybody.
All right, and India's consumption story is a multi-decadal theme. That's the word coming in from Tata Sons director Bhaskar Bhatt. Ajay Sharma caught up with Bhaskar Bhatt from the sidelines of the JM Financial India conference. Let's hear out excerpts from that interesting chat on India's story and what lies ahead. Listen in.
multi-decade opportunity we should not confuse as driven by just demographics and population and so on, which is what I talked about. The multi-decade opportunity is a combination. Our population growth rates will stop. It's already declining, the growth rate, but the inflection point will come after 10 or 15 years. But still, the value-adding population, which is going to grow to about 760 million by 2060, if I'm not wrong, that keeps growing. So the 21 to 64 age group is going to keep growing, and that is one part of the consumption story. But I spoke about all the enablers which are in place, and there are more and more happening thanks to regulation, thanks to government action, which is the technology stack and so on, as well as corporate action, which is investments and innovation. So the consumer story in India is going to play out over several decades.
Well, with this, we're timed out on this segment, but we'll see you on the other side. Thank you so much for staying tuned in. Let's look at what is happening in the futures and options market now. Ansh, how are you looking at it?
Right, so we'll start with Nifty first. As you can see in the chart as well, let's get the chart on the screen. Nifty continues to trade just below the resistance of 19,850 for fifth consecutive session. Seems like it's waiting for some major trigger to give a breakout from that level. Let's see what happened in F&O segment. Mild long buildup was seen in Nifty futures with open interest increasing by 0.6%, which keeps the sentiment neutral. Whereas on option front, we saw active call covering at 19,800 strike and active put writing at same 19,800 strike, indicating traders expecting Nifty to trade around 19,800 level only. Now let's shift our focus to what FIs did. In index futures, they covered 2,500 short contracts and they added 3,400 long contracts. So net to net, we are seeing an addition of 6,000 contracts on upside. This shows that bullish stance in the market. In index options, they added 1.8 lakh contracts on call longs and covered 43,000 on put longs, indicating traders expecting Nifty to go up. So in a nutshell, FI seems positive with indices, but Nifty has to decisively close above 19,850, 900 level to overcome this resistance.
Alright, 19,850, 19,900 are the next levels to watch out for when it comes to the Nifty. But Ansh, a lot has been happening when it comes to action, when it comes to stocks. They're buzzing on based of news flow. So take us through a list of what could be potential buzzers in today's trading session.
Right, so Tata Motors will be the first stock in focus for today's trading session, as a company is expanding its horizons by starting to sell commercial vehicles in Thailand, a move aimed at increasing its presence in Southeast Asia. Apart from this, Bank of Baroda will also be in focus, as LIC has increased its stake in the bank to 5%, indicating a shift in bank's ownership structure. Wipro will also be in focus, as company is teaming up with Nvidia to boost use of AI in healthcare. This collaboration seeks to bring AI-driven strategies, products and services to healthcare industry. Genus Power will also be in focus, as company has formed two subsidiaries for executing a contract related to advanced metering infrastructure system. Lastly, Crompton Greaves will be in focus, as company has entered into an MOU with a university which is valid for 3 years. They'll be providing pumps and control panels and thereby delivering training services as well to the university staff. So keep an eye on the stocks.
Well, absolutely. Thank you so much, Ansh, for that extensive roundup. Moving on then, TVS Motor is on a long gaining ride for 8 months and has been a top gainer in the auto index for over 3 months now. What's fueling TVS Motor? Srishti is standing by with more details. Srishti?
Well, yes, the stock of TVS Motors has been on the roll. This is the 8th straight
month where we are seeing TVS Motors giving a positive return to its shareholders. And not just that, in the past 3 months, the stock is the top gainer in the Nifty Auto Pack. What has led to this rally? So let's decode that, and 3 main factors emerge. Firstly is their resilience in the export market. Given all the turmoil that we have seen in the international markets, the market share of TVS Motors is quite resilient. And if we take a longer view, so we will actually see that TVS Motors has gained 150 to 200 basis points of market share in the last 3 years, and especially in the markets of Africa, especially Nigeria. Other than that, the second biggest factor is their resilience in the financial performance, because this is the 10th straight quarter that we are seeing TVS Motors posting a margin above that 10% mark. Do remember that between this period, we have seen the raw material prices shaping up in quite a volatile fashion. And the third biggest factor is their roaring success in the iQube electric scooters, because if we see their EV sales, the company was bang on track, where they have said that 25,000 in production they will be achieving in the second half of this financial year. They have done that, but in terms of the retail sales as well, that have seen an improvement of 2.5% on a YY basis in the month of October, and 2.2 times that has grown on a YTD basis. But one of the near-term factors is also the Ola Electric IPO, because market is giving it a valuation of over 43,000 crores. That's as per the latest round. And TVS Motors, where we see the electric contributing just 8%, some of the analysts did believe that there was some headroom for further valuation. But the key question is that given the stretch, how are the valuations stacking up? So TVS Motors has been trading at a premium valuation. 1 year forward, we see that trading at around 34 times in comparison to Bajaj Auto at 21 times, and even Hero MotoCorp at close to 16 times. So there is quite a gap in terms of the valuation, but 58% of the analysts at Bloomberg still go ahead with a buy rating on this particular counter. But key to note is their 12-month target price. That stands at around 1,692 rupees. That is like 2% down to the closing of TVS Motors. So these are the factors at play for the company.
All right, Shrishti, thanks for all of those details. Let's just focus and talk about the IPO, the biggest IPO that's been creating all the buzz, and that's the Tata Tech IPO. This IPO will be opening for subscription today, and the issue size is well over 3,000 crore rupees. Anisha is joining in with more details on this newest IPO from the Tata Group. Anisha, take it away.
Well, Tata Tech IPO is going to open on November 22nd, and it's after a hiatus of almost 20 years that we are seeing an IPO from the house of Tata. The last one was TCS, of course, back in 2004, and since then this is the first one that they are coming out with. First things first, the IPO price range has been decided from 475 to 500 rupees, and this is almost a 3,000 crore that the company is looking to raise. It's fully OFS because Tata Motors is likely to offload almost 5% stake, and a couple of other companies are also looking at paring down their stakes, and OFS happening for Tata Tech IPO. Separately, if you look at the valuation of this particular IPO, it's fairly priced. The forward valuations peg it anywhere between 25 to 30 times forward earnings, and when you compare it with the peers, the likes of LTTS or even Tata Elxsi and KPIT Tech for that matter, these range anywhere between 35 to as much as 70 times. So as compared to that, Tata Tech IPO is favorably placed in terms of the valuation as well. The market capitalization that is expected of the company is going to be upwards of 20,000 crores, because if you look at the grey market premium that we are hearing right now, it seems to be quite high, telling you that the street is quite excited for this one. And even if you look at the brokerage notes coming in, whether it was an IDBI or Ventura and even a couple of other brokerage houses, they are all having a positive subscribe rating on this counter as well. On the business front, we have seen that the growth rate for the company has been 30% when it comes to the top line over the last 2 to 3 years. Profitability has improved by almost at a rate of almost 60% for the last 2 to 3 years. The company is predominantly into aerospace and automotive as its key business area. Aviation is a little lower as the contribution from there stands at 10%, while from automobiles the contribution is almost 75%. So that remains the key growth driver for the company going forward. Tata Tech is, of course, a company which provides end-to-end services for these industries as well. So right from a mechanical engineering to a software development to the kind of value-added services as well. The entire entire array of services is offered by Tata Tech as compared to the likes of KPIT, which are usually into ADAS and higher version of the services offered.
Well, thanks, Anisha. We have a whole host of brokerage notes that are also in focus. We have notes from Morgan Stanley and JP Morgan and more. Gaurav is joining in with more details. Gaurav, which are the notes that you're looking at this morning? Good morning.
Good morning. So, as you said, we have a few brokerage notes, and the first, let's begin with IGL, where Morgan Stanley has maintained its underperformed rating with a target price of 432 rupees per share. So, we know that IGL has tie-up with the Concor yesterday, and this note is specifically on back of that. So, LNG trucking is something which is new in the segment according to Morgan Stanley, and it has a lot of scope to grow further. And with this, IGL also can grow within this segment with the new tie-up. But Morgan Stanley has also mentioned that there are some retailers like HPCL, BPCL and IOCL who has upper edge, and they can actually be a bigger beneficiaries in this segment, and that is why they have maintained underweight rating for the stock with a target price of 432 rupees per share. So next one we are tracking is RIL, where JP Morgan has maintained its overweight rating with a target price of 2,810 rupees per share. Now, if we talk about the RIL, the commodity volatility is going to impact less going ahead for its earning, according to JP Morgan. The refining complexity is also going to help them to outperform their benchmark peers. And according to JP Morgan, the RIL's telecom and retail is now contributing 50% of its EBITDA. And they are also expecting some kind of green shoots coming in from these segments. And that is why they are being positive on RIL. They also see the valuations are at a fair value right now. And that is why they are targeting a target price of 2,810 rupees per share. The next one we have for you guys is Goldman Sachs coming up with Polycab and KEI Industries. So they have initiated for both the companies with buy rating. They are targeting Polycab at a target price of 5,750 rupees and KEI at a target price of 2,730 rupees. So both the companies have position to benefit from the nation's infrastructure push coming ahead. Goldman believes that both the companies can actually grow 2 times the GDP growth in the near to medium term, and they are also seeing incremental growth coming up because of the EV push that is coming in India. But at the same time, they have mentioned that they would prefer Polycab over KEI because of its broader distribution network and faster growth prospects. So with this, keeping an eye on Polycab and KEI as well.
Of Polycab, KEI, Reliance, IGL, a lot of stocks to keep your eye out on the back of those brokerage notes. But let's shift focus and talk about the small cap space, because the small cap to Nifty ratio is back above the pre-COVID levels. Now, is there more headroom ahead for small caps? Sharad is joining in to answer just that question. Sharad, take it away.
Well, yes, in our analysis, we have taken the Nifty Small Cap 100 index and we have divided it by the Nifty ratio. Now, currently it's standing at 0.7, and this is actually hitting its pre-COVID levels also. It is highest since 2018. But even if you look at it, the 10-year average, it is still just slightly above it, coming at almost 0.6. Overall, if you look at it, the ratio is still below almost 10-year high levels and still below 18% of it. But this year also, we saw a strong rally coming in the small cap indices, and this ratio has gone up by almost 36% from 2023 lows. Now, looking at the chart itself, you look at it, there has been two or three important hikes coming in over the last 20 years, but we see the highest level seen since 2018 in the month of June also. Also, now let's look at how the rallies have panned out over the last 20 years in this ratio and how it has gone up from 2004 to 2007. This ratio has rallied by 104%. From 2000 to 2009 to 10, it's been 42%. The last rally which was there in the small cap space between 2013 to 2017, the numbers went up to 87%, and the current rally from 2020 lows is standing at almost 70-odd%.
Well, thanks, Sharad, for that roundup. Venugopal Gare, who's the managing director at Bernstein, shares his views on a whole host of sectors like IT, financials, new age tech, and more, and how he's playing these themes in his portfolio. Listen in.
Look, I would probably say that this entire thinking about 19,000 or 20,000, it's also a broader construct of, when I sort of move forward, it will be more closer to 20,000, but that is broadly the range. So I'm not really looking at this juncture the market to go up above that range. And my thinking is all these big, not really big, small corrections that you would see is the one which you need to keep buying with a 3-year view in mind. That's the way I'm looking at basically or arguing a positive view on India.
So you're expecting the index to stay between that 19 to 20,000 range, but just specifically talking about some of your long ideas, I see Zomato in that list, I see Paytm and delivery in that list as well. What's the view on these after the run-up as well? Would you continue to maintain those long ideas? And why doesn't the NICAD sector feature in this list?
Yeah, so, our broader thinking primarily was more centered around business models where we potentially felt that the competitive risks are relatively lower. So that was one broad thinking. So if I look at all the 3 consumer tech companies that we have, they are primarily dominant players in their respective end markets. And I don't really see them being in a situation where competitive risks are going to be intense. So that's the way the selection was essentially done. So 2 of them, which basically one of this e-commerce logistics company and the other is a food delivery company, of course, were introduced much earlier. Paytm.
All right, that's the word coming in from Venugopal Gare of Bernstein. But with that, I'm afraid we're completely timed out on this edition of Market Cafe. You stay tuned. The market takes all the action ahead.
4 walls don't make a home.